Okay, so we're going. Welcome everybody. I know we had a Thanksgiving week last week, and so far I've graded everything, and you're doing a good job. Very good job. Nobody here this morning, but let's at least do our work. Let's look at week four, and I want to give you something into week five. So the bottom line is, if you watch this, you could use the same. Um, I'm going to give you a little week four and week five today because I just want to get you a little bit ahead because we're coming to the last 7 days. So it's a preview for those that you want to work ahead. So you could use the following word for the live class in both week four and week five. You could use the following word for both week four and week five. Okay. So this way you get ahead of the game a little bit. So if you watch this video, you could do the live chat. The word is accounting. The word is accounting. So you could use accounting for week four. And if you watch this video, you can also use it for week five. Not that I'm not going to hold a class next Saturday, but I want to make sure that you can get ahead of the game a little bit. Okay. So the objectives here for the week four is to explain the purposes of internal control systems, to identify components of internal control systems, to identify the elements of a risk assessment. So it's really what this chapter tells us about, what this module tells us about is we want to learn about how to keep an eye on a company, basically, to make sure that since we're relying on the numbers they're giving us, how do we verify those numbers, right? How do we make sure that what we're hearing is actually true, right? How do we make sure? So, in the first part, um, the assignment is you're an intern at a bank. You work with with financial information. Employees in the bank area often explain financial concepts to their clients, right? You may have to do that if you're working at a bank. One client has specific questions about the auditor's letter in an annual report. The client has written his question. You're a managing supervisor. Would you like to respond to the client? For each question, write a short answer using complete sentences. Download the 2021 annual report for Target. You'll be using the same Target annual report as in Module 2, which I gave you. All right, make sure it's the annual report. Public company financial statements are available in their annual report, usually found on the company's website. Of course, you could find that there also, or in the Mergent online. Um, Mergent will also give you that information. Then you download this. Okay, okay, let's take a look. Now what I want you to do is download this, and you have to answer the following questions. What time period does the audit cover? So you look at that annual report. Target uses a regular calendar year, right? Which accounting firm are the independent auditors? What opinion did the auditors express? What assurance level does the auditor give? And according to the annual report, what is the management's responsibility for financial reporting? After the consolidated statements, you will see some notes on many different areas. Look at note 4, revenue and revenue recognition. Where does most of Target's revenue come from? So that's the question. Those are the questions you are going to answer, right? And it's something you need to get familiar with because as you're becoming more steeped in doing work, in a job, you may have to look up other companies. You may have to analyze companies. Well, this is the kind of stuff that you're going to really need to get comfortable with, right? So, I know at one point I gave you the target stuff, so let me find it. Bear with me. I think I gave it to you in the announcements, but let's check. If I didn't, I'll give it to you now. But you could find it in there. If you want to do your own work, you could find it anywhere. Okay, here it is. So this is the target annual report. I'm also going to place it in the week 4 work. Okay. And number one, let's open it. And number two, why don't we also stick it in the week 4 work? So this way you have it. So I'm going to go right to week 4. right here. I'm going to go to File Upload. I'm going to go to Download. And here we go. And there you go. So it's here for you, and I'm going to make it available. And now you have the target annual report. Okay. So when you go to week 4, it's right there. So let's take a look at it. Let's take a look at it. Okay. So let's open it. All right. So the first thing it wants to know is about the opinion, right? It wants to know about the opinion. So target annual report, they tell you about income. There's the letter to shareholders. You can read them if you like. That wouldn't be a bad idea. There's your financial summary. You can go over it. You can see how sales worked for the last number of years, right? Right. Here's the actual annual that they file with the Securities and Exchange Commission. The business, the risk factors, properties. You go to risk factors, and you're going to get, all the basic things that might cause Target to lose money. What are the risks they face? And they're not just risks to Target and retail. They're also going to be risks that are in the entire economies. They're going to talk about everything. And then you're going to have part 2 is going to talk about different disclosures, market risk, controls and procedures, how they control things in their firm. You go to controls and procedures. They're going to talk about how they control their finances, how they keep everything so that it's done correctly and that there's nothing criminal or wrong about it, right? This is executive compensation, right? Right? So you have all of that stuff here, right? Different factors, different things. Ernst & Young, that's your auditor. So now that's going to be your auditor. That's going to be your auditor. It's going to be Ernst & Young, right? Ernst & Young will be your auditor. I'm sorry. Your auditor. And notice that the chief financial officer signs this. The chairman of the board also signs it. They're responsible, right? And there's your annual meeting. There's your shareholder information. Let me go back. So you get an idea of what's in this report, right? You get an idea of what's in this report. Okay. Now going back to your assignment, they ask you which time period does the audit cover. By now you should know it's the 2020 period because they filed it at the end of the year. 2021, I'm sorry. Which accounting firm are the independent auditors from? Ernst & Young. What opinion did they express? So where was the auditor's opinion is what they want to know, right? And you're going to go back. And that's why I want you to do the work. I don't want to do all the work for you. I want you to go back and I want you to make sure that you're really looking at the whole auditing report. Now, in time, the whole annual report. Now, in time and over time, you're going to notice that a lot of these reports start looking the same. And you can also get a digital version. A lot of these reports start looking the same. You look at enough reports and you're going to see the same kind of thing, right? However, you're also going to see that there are going to be things that are different. And that's where you want to pay attention to footnotes, right? You want to look at the footnotes. And here in section 23 would be the consent of independent registered public accounting firm. That's where you're going to find that, right? That's exhibit 23. Okay. You go back. And this part is going to be an evaluation of disclosure of controls and procedures. Now, this is going to be done in conjunction with your accounting firm right here. So that's a piece you want to read, right? Okay. They're talking about derivatives. Okay, we're going to go back. Define contribution plans. Any kind of restricted stock units. Right? You're going to see provisions for income taxes, minority lease obligations, lease costs. This is all stuff that you're going to see in a general big company I report. Different things that they're covering. Any derivatives they're using. Any commercial paper they issued, which allows them to take care of their short-term obligations, any commitments, any contingencies. There's all their accruals, any accrued wages, any accrued gift card liability, gift cards that people bought that haven't been, that are part of earnings but haven't been charged off yet. These are all accruals. Any dividends that they owe at the end but they haven't paid yet. Any lease liabilities. There's all your accruals, okay? That has to be accounted for. These are non-current assets like goodwill, the value of the target symbol, right? Life insurance, things that are non-tangible, but are assets, and they're spelled out. You see, you just can't put these things down. There's the useful lives of their assets, their building, their fixtures. So you see how it's all spelled out here. There's other current assets, right? There's the LIFO system. There's how they value inventory. There's different investments that they have, right? There's advertising costs. There's a consideration they get. There's your cost of selling. There's again your gift card liability. So they talk about it. They sell a lot of gift cards. It's almost $1 billion. So you want to make sure you account for that. There's gift cards they issued during the current period that they didn't redeem yet. There's revenue recognized from beginning liability. Sometimes people just don't cash in those gift cards, right? And that's got to be a liability that they remove at that point. We record almost all retail revenues at the point of sale, right? Digitally. So we're going back to our questions. I think they asked that as a sixth question. Okay, revenue and revenue. Okay, that's how they make sales, right? So general merchandise sales represent a vast majority of our revenue. So there's your answer. We also earn revenues from a variety of other sources, mostly credit card profit sharing and an arrangement with TD Bank. And this would be your revenue. So this would answer that question. Hold on a minute. That's not me. So when you get over here, where did their revenues come from? Well, obviously apparel, beauty and household essentials, food and beverage. They got a lot of pretty decent return on food and beverage, right? A pretty decent revenue. Hard lines, hard lines are basically video games, entertainment, sporting goods, home furnishing, and then other. I don't know what other is. And then the credit card profit sharing. And so now you start to see. Okay. And they talk about it here, and you can talk about it. So now you're learning how Target makes money. Okay. So remember, accounting is the word for weeks 4 and 5. And there's your summary of accounting policies. Okay. So Ernst & Young is your auditor, and obviously, the company's still in business, so they have issued a good opinion. And here it is. We have audited targets, internal controls, based on the criteria established for internal controls. You have to read this and give me a summary. But in the end, because of its inherent limitations, internal controls of financial reporting may not prevent or detect misstatements. Also, projections of any evaluation of future periods is subject to the risk. But ultimately, they were given a positive report. And then there's your report by the team itself. In our opinion, they maintained in all material respects effective internal control of the financial reporting. So it's a good opinion, okay? And this is the basis for everything. So that's it. That's what you have to do on this problem. That's what you're going to summarize. That's what you're going to tell me. You do it on your own. So this way you learn a little bit about how to read an annual report, and then you're done. Okay? Any questions on that, you let me know. Any questions on that, you let me know. Okay? All right. Now let's move on to week 5. And in week 5, or module 5, it's the fundamentals of cost accounting. So what is cost accounting? It's how I will look at direct, indirect, or period costs, how I analyze variable, fixed, or mixed costs, sort of like what we did a couple of weeks ago, okay? So let's take a look. You got these assignments that you'll do in McGraw-Hill, but we're going to go here now. And this week we're looking at manufacturing companies. Public manufacturing companies prepare an annual report called the 10K. We just went over it, just like merchandising and service companies. Manufacturing accounting refers to the production of cost of goods sold and cost accounting. So this is actually people who produce things. They talk about an internship for a company named iRobot. Now you download their annual report and you write a 2-page summary. Okay, use your own words, summarize the important part of the report, write complete sentences. So give us an introduction. Choose 2 business areas of interest you want to summarize. Give a short summary paragraph. Give an example of how Sheila's could use cost accounting as information for paragraphs. And then give me a reference page. And do it APA. So let's take a look anyway. Right? Remember, accounting is the word you can use in week 4 and week 5 because I'm giving you the movement ahead. And here now, you're going to use what you just learned with Target and start talking about different parts of iRobot, okay? All right. They design, build, and sell durable, high performance, and cost-effective robots. That's pretty interesting, right? But the stuff you want to kind of focus on, okay? When we get to, and you got to read through this, I want you to get familiar. Now you get to read a second. This is a really good, well-designed class. There's their intellectual property, which is stuff that they own, their patents. That's only, so when they did their robot, when they build these robots, that's stuff that they own. There's their human capital. They have 1,250 full-time employees. Okay, that's pretty interesting. There's their risk factors. Okay. All right, let's see if we can get down to their revenues. So you'll notice when you get to revenues so you want to read through this stuff, all right? Different risks that are indigenous to iRobot. But when you get down to the risks, let's get past these risks. Keep going. All right, and then here's the number. So there's your revenue. Okay, there's your revenue. There's the robots that they ship. That's a good overview. And now you notice they got gross profit, compensation, amortization. This is all stuff that goes into their income statement, right? And notice there's, all right, that's all different parts of their income statement. Let me keep going. Now, this is where you want to focus, right here on page 37 of 92. There's their revenue, and that's what it costs them to build. So in a manufacturing company, you're going to get a cost of goods sold. Now, one thing I noticed, the revenues went down. That would be a question I would ask. Why did revenues go down? But at least you can see, you can do the percentage of cost of the producing the revenue versus the revenue. So in 2022, it cost you $830 to produce $1183 in revenue. All right, so $830 divided by $1183. That means it was 70% of their revenue is cost them to put it together, to manufacture it. 70%. Let's look at a previous year. 1564 and 1013. Hold on. 1564, 1013. Oh, come on. Something's not right. Oh, I got it. 1013, 1564, 64%. So their cost of goods sold did go up. So two things that happened here that are not positive. One is their sales went down. Two is the cost to put these robots together went up. That's something I would like ask about or look into, right? Definitely. That's something I would definitely be more curious about, I should say. All right. So right off the bat, that's something you want to pay attention to. That's something you want to pay attention to. Okay. All right. Now I'm giving you a little insight on as to how to do this. I'll give you a little insight as to how to do this. All right. Give me a minute. Okay. Bear with me a minute. A little insight as to how to do this, right? Just bear with me a minute. Okay, so that's good. That's good. I'm just trying to play around with my glasses for a minute. Okay. All right, so that's what you have here, right? So you can start to see where the revenues are coming from. And then you have your operating expenses, research. Now, research has stayed the same. So you can see where this is definitely having an effect on the company. Research has stayed the same, the research costs. Selling and marketing, general administrative. So you could see the percentage changes. And that's the stuff you want to analyze. That's the stuff you want to analyze in this report. So that's like a little guidance from me in terms of how you want to handle this problem, how you want to handle this assignment, okay? So here again, you download the report and you write a 2-page summary in your own words, okay, of an introduction, and choose 2 business areas of interest that you want to summarize, okay? Product and services, technology, sales and distribution, and then a short summary paragraph. So it's not that difficult. You just got to put in a little work there. You got to put in a little work, okay? All right. There's your revenue. There's your cost of product revenue. Okay, there's where your profits come from. And there's your selling and marketing, research and development. So every report is going to break down everything, right? Every report's going to break down everything that you need to know about that company. And it has to be there, or the auditors will not pass and give them a clean financial statement. Okay? All right, any questions? Well, you're not nobody here, but any questions? So that's what you're going to do here. That's how you're going to complete this. Okay? And there's your opinion again. Okay? So that's how you're going to handle this problem. And everything is here. And if you go back to the beginning of your report, you're going to see all the breakdown of everything you need. There's the business, there's the risk factors, there's compensation for managers, right? This is the overview of the company. Okay. There's financial performance. Got everything here. You just got to do some reading here, you know? And there's their products and services. We believe our home floor cleaning robots deliver compelling and unique value to customers. Right? So you have the Roomba, you have the Brava, you have subscription services, you have home maintenance products or cleaning products, you have home health air purifiers, you have coding robots, learning children how to row. So talk about it. There you go. Talk about it. Okay. So that covers that. We're going to close that up. Remember the live classroom for both weeks 4 and 5. Weeks 4 and 5 are going to be, those are going to be called, we're going to call that accounting. So you got direct costs, which are directly related to the product, and you have indirect costs, which are about the costs that you just use, like rent or utilities. It's not directly related when you put the costs together, not directly related, but they are costs about running the business. So while direct costs can go right into the product I create, the indirect costs apply to everything, and period. Okay. And then you have period costs that, like, different product costs that come up every quarter or every so often. So this is all summarized here. But what you have to do as a cost accountant, well, the direct costs are easy. They go right into each product line. But the indirect costs and the period costs, they have to be divided among the product lines. Okay. So you have to kind of use that, or at least figure out, the auditor has to figure out how to categorize these things. Okay. Okay. And again, that's important. That's how cost accounting works. Because if let's say I have two businesses, I'm making pizza, and the other business is going to be, so one business I'm making pizza, and the other business we did this. We did all this last week, the break-even cost again, and the variable and fixed costs. All right. So those things are going to be indigenous. Those things are going to be indigenous to figuring out your variable and fixed costs. So you're going to have to do that at one point. Let's look at them one more time. We know our fixed costs. We know our variable costs, right? So let's look at that break-even point again. Well, so let me just share something here, because I realized I didn't share. So when we go back, this would be the target annual report that I talked about, right? And I'm sorry I didn't share that earlier, but this would be the target annual report that I talked about. And the opinion would come on page 42. The opinions would come on page 42. And this would be the iRobot. And you would see everything would be on page 7, would be the different product lines. So going back to the target report, the opinion is on page 42. All right. And there's management's discussion. And the revenue breakdown was, so there's management's discussion of earnings, again on page 42. So that's where you got your, report and your report of management, and the OK by Ernst & Young. Ernst & Young are your Ernst & Young are your independent auditors. Okay. And here in iRobot, these are your products. It's on page 7. So you can talk about it. Okay. So I'm sorry I didn't share that earlier, but that's where you would get that information. Okay. So just go through each of them. iRobot, the report is included in the modules. Target, the report I gave to you, so you don't have to go looking for it. You don't have to go look, but you can find it if you need it. Just go to the Target Investor Relations side. Okay. Okay. There you go. There you go. And there's a different, and so that you should be able to handle at this point. These are forward-looking statements. Just want to go over this one more time. And there's your report, page 42. That's the independent auditors report from Ernst & Young. Okay. Right here. Okay. Right here. And okay, so that tells you that they passed and the target did the right thing. Okay. If we go back here, there's your revenues. It's on note 4, and there's your revenue. Apparel, beauty, food and beverage, and you could talk about that. And that'll complete that assignment. On the iRobot side, you have their products right here. That's how they grow their firm. And there's your products and services. And you could talk about those. And that's it. And that should cover you for this week, okay? I'm sorry I didn't share that earlier, but I did give you as much as I can give you on this. And remember, when you're doing cost accounting, you have your independent costs, you have your costs that are directly related to each product, and then you have your costs that are overall, like legal or space, your building and grounds, PCs, utilities. They have to be apportioned among the different products. So if I have 4 or 5 products, I have to say, well, these are the direct costs. They'll go right into the products. The indirect costs, I have to figure out the amount of revenue, and I basically have to use my auditor to figure out how much of those expenses went into those products. Okay. All right. And that's how you divide it out. Your break even is going to be, you have a fixed cost. So you have to make that fixed cost up to break even. You have to make it. So if I have $10,000 in fixed costs, I have to make up that fixed cost to break even. So now if I'm selling a product for $10, I got $10,000 in fixed cost. If I'm selling a product for $10 and 5 of it is variable, well, that's going to cost me, the variable cost goes, I have to pay just to do the product. So that means I'm left with $5 of basically profit, right? Because variable cost, whatever I sell for, less my variable cost is going to be my profit, like a pizza. If it costs me $5 to make the pizza, I'm making for 10, then $5 is left over for me. But if I have 10,000 in fixed cost, I have to take that $10,000 divided by $5. So if I take that $10,000 divided by $5, by the way, I'm great with applied mathematics and calculus. I'm always tricky with this. So 10,000 divided by $5, that would be 2,000 units. So I have to sell 2,000 pizzas based on that $5 to break even. Once I've sold my 2,000 pizza, I pay my variable cost, I take the $5 of profit, knock out my fixed cost. Every pizza I sell after that is $5 profit to me, because I still always pay the variable. Okay, so that's the answer to that. All right, so I will download this video and I'll give you instructions. But once again, you could use it. It gets us up to week 5, and you could use that to put in your live report. You could do either week 4 or week 5. You can use it for your live chat. Okay, thank you.